my screen. Here we go. So in the previous class, we have discussed about acquiring fixed assets through different ways. So we have seen all the methods almost except this project accounting, which we are not covering anyway, not related anyway. Other than that, we have tried all the methods. So I hope you did not find any difficulty in practicing this or acquiring these fixed assets, all of you. We have also seen acquisition adjustment transactions, how we can post acquisition adjustment for a existing transaction which is already acquired, existing fixed asset which is already acquired, and how it will reflect in the valuations of a fixed asset I have shown you. Then today, let us discuss about an important concept called as depreciation, how we can depreciate fixed assets according to the calculated values on the monthly basis. Then we'll also discuss about how we can run depreciation for a set of fixed assets or a group of fixed assets or all the fixed assets at a time for a month. Okay, so we
As
have,
legal entity is MRF.
oh, sorry for that. I just got confused. Thanks for reminding, however. So we have quite few assets, like 2 furniture assets and 8 vehicles. So all of them, 10 assets almost. So normally when you have to post any depreciation transaction in a fixed asset, you can post it through the journal. The depreciation, you can create a separate journal called as depreciation journal for posting fixed asset transactions. So that will, I'll just go to general ledger for creating such journal. Mostly they'll maintain separate journal for depreciation. Since in the journal names for acquisition, we have created a journal, right? FA acquisition journal. The same manner we can create FA depreciation journal too. So we have FA acquisition for Tax Act and Companies Act, right? So we can also create FA depreciation Companies Act journal. So it has so like the full name, fixed asset depreciation journal Companies Act. Then the journal type will be the same, post fixed assets, this one, and you have to give a voucher series for the same. Actually, I'll just copy this, then go to view details, create a new number sequence, give this, yep, company specific, which is MRF, select, remove, give it here, and save it. Okay. Then close this. You can create one more journal if you want to. Like you can create a new journal. Oh, sorry. I forgot to assign this voucher series. Without this, I can't proceed. Here we go. Yeah. Save it. I can create separate journal for FA, depreciation, Tax Act. Yeah. Can create fixed asset depreciation journal Tax Act. Then the journal type is post fixed assets, and you can create a voucher series as the same. This here, company specific MRF. Okay. Continuous, save. Go back, assign the same here. Perfectly suited. So depreciation journal is created, but this is into Tax Act, right? So I'm changing the posting layer to tax layer, which is very, very important. For all the tax act journals, the layer will be tax layer. Journal layer is also tax layer. 1 second, guys. Okay. So since we have created two journals, now let us use them for posting different depreciation transactions. Before that, we calculate depreciation on a fixed asset, or we post some depreciation on a fixed asset. We all know how depreciation will be calculated on a fixed asset. Suppose if I go to this fixed asset, truck number 3, which is vehicle number 7. If I go to books, according to each act, I know how depreciation will be calculated. So I can select Companies Act book and I can click on profile, as we all know it. When I click on profile, it shows me these details. As you can see, the details of the depreciation calculation on the fixed assets according to the each date end. So for the month of November, it is calculating this much of depreciation. I'm not sure why this is calculating less depreciation compared to other months. See, for other months, I can see it is 3000, 3000, 3000. Under straight line remaining life method or straight line service life method, we need to see the depreciation same, right, for every month. So here I can see same for every month, but not for the first month. Any idea why the depreciation is calculated less for the first month?
We are we are doing in the middle or end of the month. Because of that reason, the depreciation is very less.
Correct. We might have acquired the fixed asset in the middle of the month. That could be the reason that depreciation is calculated here on daily basis, or on the number of days that were remaining in that particular month after that asset has been acquired. So let me go back to the asset acquisition. See, I can see here it has 20 days. Okay, 20 days, right? If I go back to the depreciation profile here, so normally I can use a simple formula for calculation of depreciation here. So I'll just use a calculator. So according to this depreciation profile, as you can see here, every month depreciation is 3,333. So monthly depreciation is 3,333. So 3,333 divided by 30. Let me take the average of 30 days. Okay, for each day it is 110. Okay, into how many days we have for the fixed asset that we have acquired? It's almost like 11 days. So into 11, I have 1,222. Correct, right? 1,222. So the asset was acquired on 20th. From 20th until 30, how many days I have? 11 days. So for the 11 days, it is calculating the depreciation as 1,222. So that's what I can see in the profile here. 1,222. So you can say the system that calculate the depreciation for the first month as complete depreciation, or like how you are calculating for this month. Even though the asset is acquired in the middle of the month, it will calculate depreciation for the complete month. For the complete month as well. So that will for this we have a separate concept called as depreciation conventions. As you can see here, depreciation convention is a concept we have here in the bottom in the book itself. In the depreciation, I can see depreciation convention. So it is a specific to the asset I can give, or specific to a book also I can give actually. I mean, not specific to the book, I think to the group, fixed asset group, I have depreciation convention. You can see here, you have some options. What if the asset is acquired in the middle of the month? What if the asset is acquired in the middle of the year in case? And how the depreciation has to be calculated. This will vary according to these methods. Suppose if I select full month here, full month. So this will always guide you through the first month depreciation or first year depreciation. The depreciation convention is select something is selected to the month. So if you have selected something related to the month, like full month, mid of the month.
GP voice is breaking. Can you tell me again?
So is it breaking for everyone, guys? Hello? Saidip, can you hear me properly? Srinivas?
Yes, JP.
Okay. So what I mean to say is the convention that you select here normally guides you the depreciation process, guides you the calculation of depreciation for the first month that asset is acquired for. If the asset is acquired in the middle of the month, for that particular month, how depreciation has to be calculated will be guided with the depreciation convention that you select here related to month. In case of monthly depreciation calculation, like full month, mid-month, mid-month first of the month, mid-month 15th of the month, we have three conventions for the month. For the year also we have three: half year start of the year, half year next year, one for quarter we have mid-quarter. So let's see how this works normally. So I'll explain you in terms of monthly and yearly. So we have a documentation for the same actually. Depreciation conventions. So fixed asset depreciation conventions. We have a Microsoft document. This one explains you how depreciation is calculated according to each method. Here you have. So I'll just share this to you for reference sake. Go through it. Oh, it's a small document, so it doesn't take really more than 10 minutes to understand. So if I go back to the book again, so here I gave full month as the depreciation convention. Now let's go back and see how depreciation is being calculated here. The asset was acquired on 20th of November. So you can see for the November month also there is a depreciation calculation of full depreciation 3,333, just like every other month. For November month also, although there is only 10 days of life of the asset that we have in this month, 11 days. So even it is calculating full depreciation, as you can see here. Clear for all of you? So the first month depreciation or the first year depreciation will be guided by the depreciation conventions. It is not mostly applicable in Companies Act layer, but for Tax Act layers they use this. According to the Tax Act, the assets that are bought in the first half of the year, in the first half of the year means before the 180 days, will be depreciated for the complete year. I mean the complete year depreciation will be added. For the assets that are acquired after the 180 days, half year depreciation only will be added. So I'll show you how it will work. So this is the full month depreciation convention that I have added. Suppose if I use mid-month first of the month. Okay, mid-month first of the month means if the asset is acquired in the middle of the month. So I'll show you. Coming to the profile. Here I can see the depreciation is not calculated at all. So if at all I have acquired the asset before the first half of the month, then depreciation will be calculated. See that in the first depreciation period now I can see is for 31st of December. November month there is no depreciation calculation at all. So when we use that convention, we have this scenario. So depreciation will be left over for the asset. So if I select this one, mid-month 15th of the month, and if I go to profile, then I can see half of the amount of the depreciation is calculated here for the first month. Half amount of depreciation 3,333 will be divided by 2. I think so it should be correct. 33 divided by 2,666. Yep. The half month depreciation is calculated when I selected that convention. Okay, if the asset is acquired after the half of the month, suppose according to this, when I use this mid-month 15th of the month, after 15th of the month, if I acquire the asset, I will have the calculation, I mean depreciation calculated for the half month only. Suppose if I say placed in service is something like 10th of the month, which means 15 days before the month. So that's okay. It's a warning message saying that placed in service date and acquisition dates are not matching. That's okay. So depreciation will be calculated according to the placed in service date. Then, so now if I go to mid-month 15th of the month, I have given here, right? 10th is the placed in service date. So if I go to profile, now also I can see only half of the depreciation is calculated, which means regardless of when you acquire this asset, in the middle of the month, half month's depreciation will be calculated for the first month when you select this mid-month. Okay, if I select mid-month first of the month. Yes, I think.
Can you repeat last one?
So this one. regardless of whatever will be the acquisition date in the middle of the month, may it be in the first half of the month or in the second half of the month. If we select this convention mid-month 15th of the month, depreciation half month depreciation will be calculated straight half month depreciation. Okay, which means 1 month's depreciation divided by 2. You can see here, right? Calculated depreciation 3,333 divided by 2 is 1666 for half depreciation is calculated.
Okay,
Then if I select mid-month first of the month, suppose in the other case, see I have acquired this asset on first half, like means before 15th of the month. So if I go to profile, I see for this month full depreciation is calculated. So when I use mid-month first of the month, so if at all you are buying the asset or acquiring the asset within the first 15 days of the month, you will have full depreciation. If you acquire it after the 15 days, you don't have any depreciation at all. So that's what this normally does. This first of the month. Suppose here I gave 10th, right? So it is calculating full depreciation for the month. Suppose if I give something like 17 here, that's a small warning, ignore it. If I go to profile, see, I don't see depreciation calculation at all for the month of November. Only from December it is calculating depreciation. So that's all. That's how this conventions works actually. So most preferred the convention is like in tax method only. They'll follow this half year start of the year convention. I'll show you how it will work. For now, I'm keeping none for this and placed in service. I'll change it back to 20th, like along according to this here. So you can follow these conventions how it works. So now if I go to this tax book, okay, in tax book I have depreciation profile as reducing 30%. Means on the acquisition value of the asset 2 lakhs, 30% will be calculated for the first year, right? So let's see how the calculation is done now. If I go to profile, so it's an yearly calculation as you can see here clearly. So not yearly calculation, 31st, 1st of 22 and it is showing as so 11, 12 December, okay. 1st of January 2022, 28 February, 30 March, 30 April. Only for 5 months it is showing 2 lakhs. I think we did not give properly the depreciation service life of the asset. So service life of the asset is 5. Depreciation periods should be 60 actually. Depreciation periods remaining is also 60. Now it will calculate properly. It's a monthly depreciation only, right? Reducing 30%. Yeah, monthly according to the calendar year. Okay. I'll save it. Now if I go to profile, so I can see monthly depreciation. For the first year, I can see something. For the remaining years, I can see something. So for the first year, how it is calculating, I'll show you. So normally in the reducing balance method for the first year means from until December 31st. How it will have to calculate? It have to calculate 2 lakhs into 30%, right? Into 30 percentage. So sorry, something like 6,000. Sorry, 60,000. 2 lakhs into 30%. So 30% means 60,000 normally. 60,000 should be the yearly depreciation, but we only left over with 2 months in the year. 2 months means December and some days of November only. So this 60,000 has to be, I mean 60,000 according to the month, it will calculate and apportion here when you do not use any depreciation convention. When you use the depreciation convention as none, how it calculates is on monthly basis, it should be 12, right? So divided by 12 is equal to, so 60,000 divided by 12, I'm just doing it. 5,000. So for December, you can see it's a complete month depreciation, which is 5,000. But for November month, since we only have few days left in the fixed asset, so I mean 20th, right? It acquired on, so only 11 months left, right? So it will be like divided by 30 into 11. So 1833, you can see 1833 here, rounded off to the nearest zero. 1833 is rounded off backwards. So like this, it will calculate depreciation. But I have other conventions which I can apply directly here to this, how we have to calculate. Suppose if I select this one, half year depreciation, half year, okay. If I save this and if I go to profile, so here I can see half year depreciation is calculated. Half year means on 2 lakhs complete depreciation of 30% is 60,000, right? On 60,000 half depreciation means how much? 30,000. So that 30,000 is apportioned for this 2 months. As you can see in December I have 15,000, in November I have 15,000. So half year depreciation is directly apportioned to only remaining 2 months in that particular first year. In 2021 itself, I can see 15,000 and 15,000. So that's how half year works. Suppose if I use the same as half year start of the year. If I use half year start of the year, I'll show you again. I think it will work in the same way. If I go to profile, so here also it is working as same. Only half of the depreciation will be calculated, 15,000 and 15,000. So if you are acquiring an asset in the second half of the year, then only half depreciation will be calculated according to the depreciation convention. So you are acquiring a asset that placed in service of the asset is like 20th, right? Which is in the second half of the year after July. So that is why you can see soft depreciation only calculated. Suppose the placed in service is something like in June 1st, let's assume. So that's okay. June 1st. Suppose if I go to profile, then full depreciation of 60,000 will be calculated. See here. For the month of November, you can see 51,428, and for the month of December, you can see 8,571, which is like total 60,000 of depreciation is calculated here. Here you can see accumulated depreciation is 60,000. So if at all you are acquiring the asset in the first half of the year, depreciation will be calculated entirely. If you are acquiring it in the second half of the year, only half amount of depreciation is calculated according to that convention. So half year start of the year. So what is the difference between half year and half year start of the year then? Suppose if I select half year here and if I buy the asset in the first half of the year, even though half of the year depreciation only will be calculated. Suppose if I go to profile, I can see only 30,000 depreciation calculated here. Even though I acquire the asset in the first half of the year, I can see only 30,000 since I gave the depreciation convention as only half year. So according to the convention you select, the condition will slightly change. So if I select half year next year, so and if the acquisition is in, suppose if the acquisition is in November, so same, if I go to November 20 itself for the acquisition, it won't calculate any depreciation at all for this year. If at all the asset is acquired in the second half of the year and you use this convention half year next year, it will not calculate any depreciation for this year. Instead, it will postpone the depreciation calculation to the previous next year's coming years. Suppose if I select profile now, I don't see any depreciation for the month of 2021 at all. November, December 2021 is not there here in the calculation. But however, depreciation calculation is starting from 31st of January, so 2022. So it will go along for the next 5 years as of it's like this. And they whatever will be the remaining amount at the end of the completion of the life of the asset. So the full depreciation amount or whatever will be the remaining that is depreciated here. That is because of the depreciation parameter that you give in the reducing balance method. This one, full depreciation. If you gave this full depreciation, it will entirely depreciate the asset in the last month or the whatever is the last pending period of depreciation for the asset. It will entirely depreciate it. If you don't use this parameter, again the calculation will be slightly different. So now if I go to profile, now if I go to the bottom, so it is calculating the depreciation more than the net book value, more than the the service life of the asset. So normally earlier when I used that full depreciation method, At 2026 it stopped. Whatever is the remaining value of the asset is there, it is entirely depreciating that. But now here I can see if I'm not using that full depreciation, the remaining value of the asset is being depreciated along slowly. Certainly it's being adjusted with a minimal value. So I'm almost like 2042. It is entirely depreciating by that time. But normally people don't use this kind of method. Like, I mean, they will sell off the asset or completely close the asset at the end of its service life, or they may extend it for a few more months or years if wanted. So that's how the first and last month's depreciation is calculated according to the depreciation method you select and the convention that you select here. So do some research on these conventions according to this document, try to change them all and change the placed in service dates as well, and then see how the depreciation calculation is being changed. Okay, it should be a self-learning, this particular concept. If I would give you more scenarios also, you will get confused. Once you try to change the dates and going over to the collections, you will better understand this. If you don't understand this when you try it, then again come back to me, I'll explain you. Okay. So not most of them will ask this question in interview, depreciation conventions. Sometimes people will logically ask, what if I am acquiring a fixed asset in the middle of the year? I want to calculate depreciation only for the half of the year. Do I have such chance? Or by default, how it will calculate? Or which convention I can apply for calculating such kind of depreciation? They might cross question you. So in such situation, you have to be careful enough to explain this at least, or try to manage that particular question or situation. By answering that, we have this concept of depreciation conventions, which we can apply, which normally calculates the depreciation for the first month, which defines the calculation of depreciation for the first month for the first year of the fixed asset. Okay, now let us see how we can post depreciation for a fixed asset. Suppose let's take the example of same fixed asset. According to the Companies Act, let's see what is the calculated depreciation for the first month. So suppose if I'm going to books here, I can see Companies Act book and I can go to the profile where depreciation is calculated. So now my question is, looking at this depreciation calculation, so what is the depreciation that will be considered by the system or that we have to consider for the first month of depreciation for this asset?
Alternative 1527.
So why 1527?
Whichever is highest.
Correct. So system will consider comparing when you have two depreciation profiles in place for a single book. System will compare in which particular book the depreciated value is higher. So according to that book, that depreciation is selected here. As you can see, what is the criteria that it is selecting? It is selecting whatever is the highest value compared to these two. So this is the primary method, straight line service life. This is reducing 125 balance, 125% method. So in both of the calculations, system is considering this highest amount. When you scroll down, when you cross some years, suppose if you go to 2023, after completion of 2023, not only in after completion, but before 2023 only, I think. Starting from 2023, the depreciation calculation is slightly varying. As you can see, straight line service life method is having more depreciation amount because straight line service life is a consistent method where you have same depreciation over periods. But in the reducing balance method, you will have reducing depreciation over periods. Since it is reducing depreciation here, system is considering this balance again according to this method in the 2023. As you can see here. So that's how. Suppose if I want to post depreciation for the month of November, since this is November month, and there is a calculated depreciation of this much, so I can go to fixed asset journal, fixed assets, normally fixed asset journal. Create a new journal. Once a journal batch is created, select the appropriate journal name. So I'm selecting this one, Fixed Asset Depreciation Companies Act. So according to the Companies Act, see, for depreciation transaction, we don't have derived books linked to each book. So both are separate. So we'll post the depreciation for Companies Act separately and for Tax Act separately. Now, since I have selected Companies Act here, I'm going to lines. So for the month of November, normally depreciations are posted for the month end only, right? So I can select the month end here, and I can select the transaction type as depreciation. Transaction type as depreciation. Okay. For which fixed asset you want to post the depreciation for? So what is this asset number? It's vehicle number 7. So I'll select vehicle number 7, truck 3. So then will automatically consider the book here. It will take it to refresh a while. Yeah, here I can see the book. So normally when you post depreciation to a fixed asset, what happens to the fixed asset? Will the value be debited or credited?
Credited.
So fixed asset will be always credited. Depreciation expense account will be debited. So here you can credit the value of depreciation. So this one, right? System is considering this according to the calculation. So I can give that value of credit here for the month of September ending. Then ledger account, I can see offset account, I can see depreciation expense account for debiting. So expenses are always debited. So this depreciation account will get debited. How it is taking this depreciation account automatically? Anyone have any idea?
In profile, we have given.
It's not profile, it's posting profile. Yes.
Posting profile.
In the posting profile for the depreciation transaction, we have configured. I'll just take you there. Fixed assets, posting profile. For depreciation, we have configured some main accounts, ledger accounts. So depreciation, for depreciation in the Companies Act book for vehicles, the main account that I gave is accumulated depreciation account. So behind the asset, I will have this account for depreciation transaction. And the offset account will always be this depreciation expense account here. So that is what brought in here. Behind the asset, I will have accumulated depreciation account, which is credited. And I have an offset account as depreciation expense, which is going to be debited. In this way, I can manually create a depreciation transaction and I can post it if now. But there is a situation in business regularly that they might have hundreds of assets. According to each group, they might have 100 assets in each group. So what if they want to post depreciation for all the assets at a time at the month end? Suppose for the month of November ending, for they want to depreciate all their fixed assets. How can they do it for line balance? Yeah, they cannot create it for every fixed asset, right? If they have 1,000 assets, it will take a lot of time for them to create a line and check the balance of how much has to be depreciated and enter that balance on the credit side. So it's a very tough task. So for that, we have a process called as proposal. So suppose if I will delete this line, I'll again create it, no problem. It will automatically get created. So we have this concept called as depreciation proposal. So you can either run this depreciation proposal from here, or you can run the depreciation proposal from here also. Here also you have create depreciation proposal. We will run the depreciation proposal from here for the Tax Act depreciation. But for Companies Act, let us try from here. Okay, so you can run for Companies Act also, you can run from here, no problem. From this journal entries, create depreciation proposal. But since I want to show you both the ways, so I will show you Companies Act first in this one, in the journal, how depreciation can be calculated. So I'll just remove this transaction that is automatically created. I mean, it is the same, right? Yeah, depreciation. Okay. Then I'll just remove this one. So I can run the proposal here. Create depreciation proposal here. Select this one. It will open a window on the other side. So to which date you want to run the depreciation for? I want to run it for month of November. Suppose if I forgot to post depreciation for the fixed asset in the month of October or in the month of September, suppose it will bring all that old depreciation also. It will also bring the old depreciation for the fixed asset. Whatever it is missing, it will bring all the old calculations also. Suppose if I'm running it for the month of November and if I miss the last 6 months of depreciation posting, it will bring the lines of all the last 6 months also. So for that example, I'll show you one more depreciation proposal in the later example. Okay, how it will calculate. So for now, I am calculating it only for the month of November, and all the fixed assets that I acquired are all almost in November only, either on the 1st of November or in the middle of November, not in any other month previous than earlier to November. So only the November month depreciation will be calculated for all the fixed assets. Okay, this summarized depreciation is one option I have when, as I told you in the previous example, in case if I have previous depreciation also that has to be posted. So all of them will be summarized and brought into a single line. For the November end, all the previous pending depreciations also will be consolidated and brought into a single line. If you don't select this parameter, all of them will be represented in separate lines on the month end June, July, August, September. So 6 lines will be created for the same fixed asset for the depreciation that was pending to be posted. Okay, that for that I have this option. So you can run depreciation for one single fixed asset if you can filter it, or you can run depreciation for a separate group of assets. Like for vehicles group only, you can run depreciation excluding the furniture. Or if you don't select any criteria, you can, I mean, it will run for the entire fixed assets at a time. All the existing fixed assets in the book, it will run at a time. Usually they'll run it according to the group by group they will run and they'll check if the depreciation calculated is correct or not. So we'll also try to filter it with vehicles group only. We have 8 vehicles, right? Let's try 8 or 6 vehicles or 7 vehicles, I think. Yeah, we'll try to run depreciation for all those 7 vehicles, 7 or 8. How many? I have 8 vehicles, I think. You can also select a book like Companies Act book and Tax Act book, or posting layer also will be enough. Normally Companies Act is into posting layer current, right? So automatically current act book only will be selected. If you select tax layer, so you cannot select tax layer because this journal that you have created here is in current layer journal. So current layer is by default here. Otherwise, if you are running it from the outside, as I showed you earlier, from there you can change the layer also. I'll show you that one. So calculate depreciation. Yes, I want to run it for one particular group of fixed assets like vehicles. Okay, I have 8 vehicles. So for which book you want to run, you can select Companies Act book only. So current layer Companies Act book. This is the selection. If you want it only for 1 or 2 assets, you can select those 1 or 2 assets here by keeping comma. You can select one by one asset if you want, but my selection is I want to run it for the entire group for all the vehicles. So now I can click on OK here. Criteria is selected. Now I can again click on OK here so that it will run automatically here. So click on OK. It will run on the screen for a while and it will create all the depreciation lines automatically for the assets. See here. 1, 2, 3, 4, 5, 6, 7, 8 for all the 8 assets. As you can see, vehicle number 1, 2, 3, 4, 5, 6, 7, 8 for all the 8 assets. It is calculating depreciation according to the Companies Act book, and this is the calculated depreciation for each asset. And these are the offset accounts used for the asset that you have given in the books. If you have given financial dimensions, it will automatically pick those financial dimensions. For the assets where you do not give any financial dimensions in the book level, it won't pick dimensions. That's all. And if these amounts are correct, it will be correct only. So if you want to see for vehicle number 1 how much depreciation it was there for month of November, you can go to vehicle number 1 in the fixed assets. So vehicle number 1, go to valuations if you want to. Here also you can see the depreciation, right? So in the profiles you can see depreciation. So according to Companies Act, the depreciation for the first month is 11,354.20 here. So you could see the journal 11,354.20. So for every asset, it will select from there only. For cycle, vehicle number 6, right? Let's see, there is only 10 rupees depreciation. So for cycle, if I go to valuations and profile, I can see only $10 of depreciation according to the alternate depreciation method. I can see $10 of depreciation. So that $10 is picked here. So entirely for all the 8 vehicles at a time, depreciation is calculated for the month of November. Suppose if you miss calculating depreciation in the month of November, I'm deleting all these lines. I'm not posting them. I can again regenerate them. So let's go to the second example. Suppose if I'm going to proposal, I am in the month of December. Let's suppose I'm going to December 31st. Okay, let's assume that I'm in the month of December and I forgot to post depreciation for all these assets in the month of November. Now I want that depreciation of November as well as December to be calculated now. So I want to calculate and post all the depreciation pending from the previous months also. So, so I am selecting December 31st here, December 31st, 2021. And if I run OK, so I can see multiple lines here. So for each asset, I can see two lines. One is for the month end of November, one is for the month end of December. Vehicle number one for the first month, I see the depreciation calculated this much. For second month, this much. Vehicle number two for November month, this is the depreciation calculated. For December month, this is the depreciation calculated. In the same way, for all the 8 vehicles, for 2 months depreciation is automatically brought up here. This is how we can separately calculate depreciation, whatever is pending on the fixed assets from a while. If you are running it for a specific date, the earlier date's depreciation pending also will be brought up automatically into the journal. Now you can validate it and post it. See, offset accounts also will be picked automatically, and amounts are also on the credit side since it is correct. All clear, guys, for everyone? Do you have any confusion in this? Doesn't it easy to understand and to run depreciation for assets? What do you say, Sairam?
Yeah, it's easy. Can you show me for
For
depreciation
depreciation,
కంబైన్ చేస్తాం కదా, లైక్ ఒకే లైన్
summarize the depreciation.
సమ్మరైజేషన్.
I'll show you. So I'll run that once again. I'll just remove all these lines here. I'm not posting them. If you post them again, it won't bring depreciation. Okay, once you delete it, if you go for proposal once again, go for depreciation proposal. This time I will enable this parameter, summarize depreciation. Means whatever is the pending for the month, all has to be brought into this particular date only. So now if I click on OK, here I only see 8 lines, all for December 31st, and I can see double depreciation. I mean combined depreciation of November month and December month here for all of them. So I can also see the description depreciation, since it's bringing the same actually 1130, but I mean since from then it is saying from 30 November to until 31st December 2021, it is the depreciation added up. 2 months depreciation, as you can see. For cycle, if you see 30.39, right? So if you go here, you can see here 30.39, 2 months accumulated depreciation. The same it is brought up here. Clear, Saira?
Yes.
Yeah, usually they don't post summarized depreciation, but they post only monthly wise because they want the accountability as well, right? How much is calculated for which month. So that is why we can also do the same. I'll run it only for the month of November once again, not for the depreciation proposal. So I can select this one as month of November 30, and I can click on OK. So this time if you select summarized also, there won't be any problem because only 1 month depreciation, right? So it will be 8 lines, all of them. Then I can validate this and see if there are any errors, and I can post it. See, it is validated and I don't see any issues. Then I can post it. Once posted, depreciation will be posted for all the fixed assets, mean all the 8 vehicles at a time for the month end of November. Here we go. It is posted. Now if I go to one of the asset, if I go back and reopen the valuations for the cycle, for suppose here 1 month depreciation is posted, right, in the Companies Act. So Tax Act not posted. In the Companies Act, I can see depreciation of $10 is posted. Acquisition value is 1005, depreciation is 10, and I can see net book value is 995.20. Yeah. Acquisition minus depreciation will be net book value, right? So here I can see it. If I go to profile, suppose here that month was eliminated. Month of November was eliminated because for November already depreciation was posted. Now it is showing the depreciation for the month of December. Again for January, it is February. So if we post for December also, it will also delete this line from here. Our representation will set off or go off automatically. Okay, only the next month will show up. So as you can see here, see not only for this asset, for any assets in the vehicles. Now suppose if I go to Benz truck, if I go to books, so in the book-wise representation also in the Companies Act book, if I go to profile, I can see depreciation is only showing for the month of December now. For the month of November, we already posted, right? So I don't see anything here. So this is how much we have posted accumulated value for the 1 month. If you go back to the book, you can see date when depreciation was last run. When was it last run? 30th of November 2021. You can see total number of depreciation periods were 60. Now the remaining depreciation periods were 59 only, because for one period you have already calculated depreciation and posted it. So you can change it if you want to, but not most of them would prefer to change it since it brings some confusion in calculation of depreciation. Again, if you change all these things. So this is how it shows up in the book once the depreciation is calculated. Now we have to run the depreciation only for 8 vehicles, right? For furniture, depreciation is pending. So let's try to run the depreciation for furniture as well. For that, I'm not going to fixed asset journal. I'm running the depreciation from here. Create depreciation proposal. Okay, this one. It will be the same option again. If you click on create depreciation proposal, again it will ask you the same, except 1 or 2 options extra you have. I'll show you what it means. So it is for which layer you want to post, current layer or tax layer. Current layer. So which journal you want to use. For current layer, you only have 2 journals. For other 2 are for tax layer, right? So you can select this depreciation current layer journal. For which month? So month of November. Okay. You can also run the depreciation for multiple legal entities at a time. From here, you can select multiple legal entities also. You can select, and for those multiple legal entities, you can run depreciation at a time. At a time, you can run depreciation for the fixed assets of those legal entities, but we are not going to use all of them anyway. We are only going to use our legal entities group. So summarize depreciation, I'll off. Post journal. If you want to, once after running the proposal, if you want to post the journal automatically or directly, you can use post journal. Or if you don't enable this one, you can review the calculated depreciation and you can post it later by manually. So I'm not enabling this one. Fixed asset group you can select. Actually in this you will see list of all the fixed asset groups from all the companies, but we want it for our company, right? I'll select MRF here, apply. So filtering at the data source level is not allowed for cross company query. Then what else we can do? Where is MRF here? We can't see MRF here as well. Some issue with this. Let me select vehicles MRF here. I can see, right? F and F, MRF, F and F. I can see here. F and F, MRF. So book, which book you want? Companies Act book, right? Again, I got into MRF. Where is this Companies Act book? CA book, MRF. Here. Companies Act book, MRF. You can also run it in the batch if you want to, or you can disable the batch. If you run it in the batch, it will run in the background, and after a while, journal will be created. Now you can run it here in the screen itself. After this selection, it will automatically run on the screen and create a journal automatically in the depreciation journals or in the fixed asset journals. See here, it is saying journal number 102 has been created. Now you can go to fixed assets, fixed asset journals here. Select this fixed asset journal that is created, fixed asset depreciation journal. In this one, 102. Go to lines. So for the 2 assets of furniture and fixtures, number 1 and 2, depreciation is calculated for the month end 30th November 2021. Okay, this is the depreciated value, and I can see the depreciation expense account in the offset account. Now I can post the same. So this is how from outside also we can run it, where it creates a journal automatically, or you can create a journal and also run the proposal from here, as I showed you in the previous example. So now you can also see the voucher that is posted for this asset. So go to voucher. You can see accumulated depreciation being credited instead of asset account, and depreciation expense being debited for calculation of depreciation. So since depreciation is an expense and a loss, so it is always debited with the amount, and accumulated depreciation is credited here. So that's how. Clear this one for all of you. Got any confusion with the calculation of depreciation, anyone? Srinivas?
No, GP.
Saidip? Sushila?
Yeah, no.
Okay, now Sushila will guide us how we can calculate depreciation for the tax layer for all the fixed assets at a time. So I am back to the main menu. So could you please guide us with the same?
Okay, actually, I need some practice as well. Can you
Okay.
please ask anyone else?
Then can somebody take volunteer for this situation that I have explained now?
Fixed asset.
So Sairam takes its fixed assets. Okay, then.
Hello.
Yeah, please.
Fixed asset. Journal entries.
Okay,
Uh,
let's use this
create
method.
a depreciation
Create.
proposal.
Okay. Then.
Select the posting layer as tax layer.
Okay, select the posting layer as tax layer. Okay.
Select the name of the journal.
Okay.
Set depreciation journal.
Fixed asset depreciation tax act. Okay.
Date to whatever the date you
So
want.
30th November. Okay. Legal entities MRF. Okay.
Fixed asset group. We are going to run for
We are going to run for both groups, right? So
comma,
then,
comma,
comma,
and select other group of the company. Vehicles.
vehicles
MRF.
MRF, and keep
Book. Book
comma.
is tax book.
Okay. Book is tax book. So TA book is here. So I'll remove this company's act book from here. I don't think that this will work. I mean, two groups into single, but let's see if it works. Okay. So now,
Can you scroll down
yeah, and disable this batch job.
and create journal?
Click on create journal. Let's see if that will take the for 2 lines or not. See, it is saying journal number 103 has been created. It was previous message. This is the new message. Okay. Go to fixed asset journals to check the
Fixed asset
journal.
journals.
So this journal is created. Let's see the lines. See, I don't see any lines here. What could be the reason? Selecting two groups into one proposal could be the reason that I could not see them here. If I select single group, it could have brought the entries. I think that will not support in that particular filter. That's not a filter actually, that's just a drop down selection, but it will help you select it here in the depreciation proposal through the journal. So here, select a filter. So for fixed asset groups, and this time let's try it from here. So two books I want, right? Two groups I want, FFF and vehicles, both of them. I kept, rather than this comma, I could have used this one, semicolon. Okay, this time let's see. So I selected semicolon, full stop beneath the comma and comma. No, it's not working yet. I think we can't run all of them at a time. Depreciation proposal. If you don't filter it at all, then it will run, right? For all of them at a time. Then let's try that one. Let's take off the filter only from here. So I'm not selecting any filter. I want the asset, all the assets for all the groups. Okay. Calculate depreciation is, and it's a tax act book and tax. So all the fixed assets will be selected. Now I'll run this. Here, even though I could not see this one. What could be the reason? Let's delete this. Go to proposal, depreciation proposal, fixed assets of the tax act, tax book. Everything is correct, right? There's no compulsion to select a group, but I'm not sure in this version what bugs are there. So tax act book, okay. Posting layer, okay. Not selecting any group. Fixed asset number also I'm not selecting, okay. Now it's calculating. Not sure what went wrong. Okay. So I can see the depreciation calculated for all the, I can see 10 vouchers here, means 10 fixed assets are selected. See 2 sofa sets, 2 furnitures as well as 8 vehicles. For all of them, I can see depreciation is being calculated according to the Tax Act. So according to the Tax Act for the month of November, this is the depreciation that is calculated. Okay. All the depreciation for the month of November according to the Tax Act, reducing 30% method. Now I can post the same. See, I can see all the transactions here, all the 10 of them for the 10 fixed assets, and I can post them at a time. So posted all of them. Now I have depreciation posted for Companies Act as well as Tax Act for all the assets for the month of November. Happily. So that's how we can run the depreciation. Suppose that, let's see, for this particular asset, let's say vehicle number 1, the depreciation posted according to the Tax Act, something is like 13,625 is not correct. If you feel like, if you want to change something, if you want to reduce this 625, so you can do that by doing depreciation adjustment also. Or if you want to additionally add some depreciation, you can make some depreciation adjustments to the fixed assets again. So for that you can create new journals. Suppose if you go to Fixed Asset Depreciation Companies Act, go to lines. Before I post it, I'll just take you to one of the fixed asset. So fixed asset, this one I have Benz truck. So the Benz truck, if I go to books, if I go to transactions for the Companies Act book, so posted depreciation was like 11,354 for the first month. 11,354 was the depreciation. So I can adjust some depreciation. I can add more depreciation or I can reduce more depreciation by using this depreciation adjustment option. You can also use depreciation as well. If you use depreciation, again depreciation will be reduced or increased. But you can also use depreciation adjustment, which is more appropriate for the month end. You can post it and select the same vehicle account, vehicle number 1. If you want to add more depreciation, you can credit it here. So if you credit another 100, depreciation of another 100 will be added. If you debit it 100, depreciation will be reduced or reversed for 100. So I'm doing it. I'm reducing the depreciation. I'm debiting it. So the depreciation expense account will be credited if I am adding value to the asset. So here in the example of depreciation adjustment, depreciation expense account is being credited and accumulated depreciation is being debited. So which means I am doing some reverse adjustment for the depreciation. Okay, you can do any other side depreciation adjustment also you can do if you feel like the posted depreciation is less. So it is saying something like depreciation amounts with a date later than adjustment date exist. It is saying a warning message that already depreciation was posted and you are trying to adjust the depreciation of the posted period, it is saying. So that depreciations will be recalculated. That's what it is saying. You can say okay. Let's see now. So if I refresh these transactions here, I can see another $100 depreciation adjustment is done with a negative way. I mean, in the posted depreciation earlier, 100 is reduced. As I can see, it's an adjusted. Now, if I go back to the asset once again, so companies at current, if I go to the profile, so I can see here that will be adjusted anyway. So here it should be something like so that 100 value will be again adjusted to some other previous, I mean next coming forthcoming periods. That 100 reverse depreciation value. Here I can see 11,354 for the month of December actually. Or if I go back and reopen the books again, and for the Companies Act book, if I go to profile, I can see 11,354 here. If I go to the previously posted transactions, it is also 11,354 only. But this 100 will be adjusted in the next year calculations or in the net book value of the next years usually. So that's how depreciation will be, can be added or can be reduced or adjusted accordingly. Whatever you wish, you can do it with the depreciations and depreciation adjustments. You can do a positive adjustment or a negative adjustment to the depreciation. So it's up to you if you want to increase the asset value or decrease it or the representation. Suppose if I go for the valuations of this fixed asset for the Companies Act book, so I can see go to business bench truck, go to valuations here. So I can see here the valuations of the fixed asset. It is acquired for 5 lakhs. You have done acquisition adjustment for 45,000. Actually, you have done it for 50,000 and that 5,000 was again reversely adjusted. So you can see 50,000 and minus 5,000, two transactions for the acquisition adjustment. Then I can see depreciation posted for the month of November, something I can't see for the month, but I can see here. If I click on this balance, it will show me the number of depreciation transactions that I have posted to this asset. So 11,354. And you have done one depreciation adjustment, which you can see a positive amount of 100 here. So that is one transaction I can see here. So it will show the consolidated amounts here. Total number of depreciation posted. It will show the total amount of accumulated depreciation posted here. Total depreciation adjustment amount posted here. It will show the total acquisition adjustment posted here. It will show all those details. In coming to Tax Act, since you don't have any depreciation adjustment posted, you only posted it for Companies Act, right? So you can see 0 here in the Tax Act. So here you can see depreciation 13,625 calculated according to the reducing balance method, according to the Tax Act, separate representation, separate representation. Here you have separate net book value. Here you have a separate net book value according to both the acts. This is the main act. This is for only tax representation for the tax authority. So on which you normally calculate capital gains upon the sale of fixed asset for the profit and all. So that computation of income tax on the capital gains and all will be considered according to the how you maintain your Tax Act books. So this would be all about calculation of depreciation and how it will be represented in the fixed asset level. Tomorrow we'll see some other additional options that we have on the fixed asset, like changing fixed asset group, transfer of assets, and fixed asset additions and lending details and all. Small options only. We'll cover them all. And if time permits, we'll start with the sale and scrap of fixed assets or any other transactions if you have any. Mostly it will take another 2 to 3 classes. So sale of assets is important class actually. Other than that, we have reports and parameters to be discussed. So we will discuss them. So I think that would be completing the fixed assets. So coming to fixed assets module. Fixed assets, yes, depreciation conventions. split assets we have, other activities. Okay. Then we have something else which I am not documented here. I'll explain all of them as well. Okay, tomorrow would be of remaining transactions and other options available on the assets. Day after tomorrow, sale fixed assets, and if time permits, reports and parameters, and that would end the depreciation fixed assets class. Okay, fixed assets is a very important module, as I'm again saying. It needs very much practice, and its logical application is required actually to understand all the concepts. So try to focus, try with more examples, keep on trying and try to see how it is working, and you will get the logic for sure. Let me know if you face any difficulty. That would be all, guys. If you have any doubts, you can ask.